Hello fellow traders, it's Rafał Zuchowicz and welcome to my channel. In this video I will teach you about head and shoulder formation and wait for it, about 5 types of head and shoulder formation. So let's jump straight into it. First type, of course, classic. So let's define what is head and shoulder. The price is going up. Then we have a strong continuation. The price is continuing. We are in a bullish market, but at some point we meet with the resistance. And there is some level that the price has difficulties with, or the buyers know that they want to start sell off. What do? They don't wait all the way to the level. They start selling off earlier. And this is our first sell-off. Later, of course, there is a pullback in a bullish market, so that's opportunity to buy, isn't it? So new buyers are coming in. They are buying, but then the resistance level is too strong and too many sellers are selling off. But of course, we have a new formation in a bullish market. We have a double bottom. Beautiful. So previous support becomes a new support, and then bang, we are going up again. But of course, the sellers, the experienced sellers, they know that the resistance is around the corner and they don't want to wait all the way. They are selling at the same level as previously they start selling. They're already happy with this level and they sell. Now there is not enough of money to continue longs, and there is imbalance in the market and the sellers are winning. The sellers are breaking the neckline. So this is called the neckline. This is called the shoulder line. And of course we have our head. We have our left shoulder and we have our right shoulder. Now let's jump into Y type of head and shoulders. So there is the same scenario. The difference is that our right shoulder is higher than the left shoulder and the neckline on the right hand side is lower. So we have sort of a letter Y if we look from the left side to the right. Okay, another is a P type, and P type is completely opposite to Y. So now our low is a higher low and we have a lower high. So this is sort of a letter P, as you can imagine. Another type would be an N type. So that's where the high is higher, or the low is higher, and then the high is higher as well. So imagine like a letter N on the N wave in Ichimoku. This is exactly the same. If you are familiar with my Ichimoku teachings, you know there are certain types of waves, and they are N, P, Y, S, and these letters are exactly the same because the logic here is exactly the same. So we've got different types of head and shoulders instead of waves. Another type would be an S type. So this time our new low is a lower low and we have a lower high. And then the neckline is broken and the price is going drastically down. Okay, so that's our 5 types of head and shoulder: the classic, the P, the Y, the N, and the S. Now let's jump into the charts and let's search for some real examples on the charts. British pound to Japanese yen, weekly charts. And what do you think? Is it C, meaning classic formation, or S formation. I'll leave the comments below. I think it could be we could call it a classic, although this low is lower, but these highs are equal. So, and then we have another low which is equal. So I would call it a classic. But yeah, it's just the name. You don't need to pay attention so much to these names. Nevertheless, left shoulder, head, and right shoulder. And now, how do we calculate the target? There are few schools, few ways of calculating the target. First one, the one that I would use, you take the Fibonacci retracement and you measure the biggest impulse. So this is your biggest impulse, and now you are waiting for 100%. So where is 100%? It's at this level. So this is our 100% here. Another school would be that you take either the longer, so you can take the smaller one as well. Smaller one is fine. You can do, instead of taking this line, you can take the pullback, so just the shoulder line, and then you can see that 200% is exactly here. So the market reacted beautifully at this point, and it comes off actually the Ichimoku targets. So this would be a E target, and that would be the V target. So if you're not familiar, please take my Ichimoku course. It's completely free, unless you want to take the advanced one where I'm teaching how to trade with Ichimoku. But the explanation of Ichimoku is completely free. Go to my website. And another way is that we are calculating the impulse here, and then we are putting from the moment of the breakthrough line. So this is the neckline, and that would be our breakthrough, and this is our 100% over here. So we can see that there was a perfect reaction at this point as well. So we got a very strong reaction previously on this level, and we have a beautiful reaction on that level, as well as of course 100% here. We did got to this level as well, a very strong reaction. So you can see that all were working just fine. Another thing worth noticing here is that look at the neckline. This is our neckline, and what the market does, it falls below the neckline, and then it's retesting the neckline almost up to the point, and then it's falling again. Okay, so that was our very strong support here. We can see there was very strong support, then there was a resistance, the market fall below, then this support became a resistance again, and the market has fallen again. That's why it's very important to mark places like that, because our next opportunity, so the market is going, and then our next opportunity was exactly at this point, because this is the key information. So pay attention that the head and shoulder formation, you are not looking for it anywhere. You are looking for it at certain points. So the market needs to be exhausted. There need to be some proper resistance or proper support for the reverse head and shoulders, which I will be not discussing in this video. You can imagine, just put the chart upside down, take a screenshot and put it upside down. It's exactly the reverse version of head and shoulders for the falling market. And yeah, so we are looking for some very strong resistance or support where this formation will be building up, and then the market will heavily fall. And behind, it's very good to have behind a strong trend as well. So that's, we have exactly that. We have a very strong trend. You can see there's 1, 2, 3, 4, 5, 6, 7, 8, 9 waves. And then we have a very strong formation. I'm just moving everything around. And this is the P formation of Head and Shoulders. This is our resistance, very strong resistance, as we've noticed before. And again, this is that's what's happening. The market is forming left shoulder, head, a right shoulder. Then there is a very strong break through the neckline. We are breaking through this support as well, and the market is falling. So now again, we can just measure the longest impulse here and get our 100%, which would be at this point. And our 100% was reached. So this is our target. And look how big is the target. Your entry point would be over here, or at this candle, let's say. And all this movement is yours because of head and shoulder formation. So this is very ancient, very classic, but very powerful formation if you know how to trade it. So remember, you need a proper resistance, proper support, for clear formation, have a good rally behind your back, and then you can wait for this distribution, because head and shoulders is nothing else but distribution. So we are distributing here, distributing here, distributing here, and then after the distribution is finished, the market is falling. The previous buyers, they happy, they made money, they sold everything they got, maybe even they took opposite trades, and now they are driving the market. The same traders who push this market up, now they are pushing it down, so you can make another loads of money. So remember, this formation is very powerful formation, and this is a P type, of course. Later, keep moving. Later, what happens? The market, of course, again, 1, 2, 3, 4, 5 massive waves. Then the market is changing direction, but it's hitting our previous 100%. So our previous 100% was at this point, and look what market is doing now. The previous support became a resistance for the market. So now again, we have a nice moves, and the market is saying, okay, I'm afraid of this level. So there is a first drop. Then, okay, let me try to take it. No success. Look at this huge candle. There was a breakthrough. There is a one attempt, pullback, another attempt, pullback, another pullback, another. The beautiful candle closing, but a massive rejection. Retest of this level. Look how precise is the retest, almost up to the point. And again, rejection. So we are breaking through, and you can check the levels again, measure the strongest impulse. This is the take profit at this purple line. Beautiful. The profit has been reached here, and we are in the money. So this is it. These are the formation that I found quickly on this chart. So the classic, or S, that's the P wave, that's the Y wave. So we've got the N formation missing. Try to find it yourself. Post in the comments the time frame, the currency pair first of all, and then the time frame, and what time was the head. Let's say the head. So then we will have a look. And what formation was it? So try to find few, exercise it on a historical data, have a look, how would you calculate the take profit, and if the take profit was reached or not. which style of calculation of take profits suits you. Is it the longest impulse and 100%, or maybe just the arm, the shoulder, I mean, because you're afraid that it might not get so far, or maybe both of them. Let me know in the comments. If you like this video, please watch one of these videos that I will leave on the site. Subscribe to my channel, that makes me happy. Thumbs up, and guys, appreciate your support. All the best, and until the next time, bye.